Did you know that since the start of 2019, 42 lenders have reduced their fixed rates, whilst at the same time, only 2 lenders have reduced their variable rates? So what does that mean? Does that mean that you should choose fixed over variable? Let's answer that question in this video. Before I start going into whether you should fix or not fix your rates, now that the rates are very competitive, let me just say that what I'm about to talk about is of general nature only. All right? Everyone is different, and what works for one person doesn't work for the other. So remember, this is only general advice. If you need specific advice based on your specific circumstances, make sure you check with your bank, with your broker, or if you want to check with me, I've added a link where you can book a time to talk to me for 15-20 minutes. Now we can go over your options. I can explain to you exactly how the fixed rate works, and you can then decide for yourself whether that is the right option for you. So before you decide whether a fixed rate is right for you, you need to understand what a fixed rate is, and you also need to understand the advantages and the disadvantages of a fixed rate. So let's start with what is actually a fixed rate. So a fixed rate basically means that for a foreseeable period of time, 1, 2, 3, 4, or 5 years, the rate will not change. That means that your repayments will be the same for that period of time. So if you decide for a fixed rate, you need to decide whether you want it for 1, 2, 3, 4, or 5 years. One thing that you need to consider, and that is very important, you need to understand what your plans are for the next 1, 2, 3, 4, 5 years. All right, because if you are going to sell the property, if you're going to refinance the property, then you want to reconsider the term of your fixed rate. But I'll get into that a bit later on. All right, so now that you understand what a fixed rate is, let's have a quick look at what the advantages are. The first one is pretty obvious. Because the rates are fixed, your repayments are fixed, so it makes it a lot easier to budget for the next foreseeable future. All right, so that means you know exactly what your repayments are going to be for the next 1, 2, 3, 4, 5 years. All right. The other big benefit is that if rates are going up, your rates are going to stay the same until your fixed rate expires. By the way, when your fixed rate expires, you have a choice. You can either refix your loan, or you can decide to let it revert to a standard variable, or you can refinance to a different product. Maybe it was a cheaper variable rate if you decide to go variable. All right, so you've got a choice. Now let's have a look at the disadvantages of a fixed rate, because that's important that you understand. First of all, because the rates are fixed, that means that if rates are coming down, your rates are not going to go down. They're going to be the same. All right, so you need to understand that. You will be protected if rates go up, but you won't be protected if rates go down. Now, the other disadvantage that you have compared to a variable rate is that the amount of extra repayments you can make above and beyond your normal repayments is limited. You know, it could be $10,000 per month, it could be $30,000 over the term of the loan, it could be even less. So if you decide to go for a fixed rate, you need to understand what the limitations are in terms of extra repayments. All right, so make sure you understand that. Now, the other restrictions that you have is, if you have made extra repayments, do you have access to those funds to redraw from your loan? Now, like you would do in a variable rate loan. If you make extra repayments, these extra repayments are what we call funds in redraw or funds available. And in a variable rate loan, you can actually redraw these funds, and usually it's free, but make sure you check. These funds are actually available for you to redraw. Now, with fixed rates, there are limitations. Some lenders will allow you to redraw. Most of them will not allow you to redraw. So even if you've made extra repayments, that extra repayments is not available until your fixed rate expires. All right. Another big disadvantage of most fixed rate product is that you don't have access to an offset account whilst you are on a fixed rate loan. And that is often the reason why borrowers choose to have a variable rate loan, because they want to be able to use the advantages, the benefits, the feature of an offset account. Now, there are a few lenders that will allow you to use an offset account against a fixed rate. Some will allow you to offset the entire amount that you have, that is 100%, and some will allow you to offset a smaller percentage, for example, 40%. So make sure you understand what the limitations are. If an offset account is important to you, I'm going to show you how you can take advantage of an offset account as well as a fixed rate in a few minutes. Now, another big disadvantage of a fixed rate is that over the period of the fixed term, you are restricted as to what you can do. For example, if you wanted to refinance or if you wanted to sell your property and your loan is still within that fixed term, you might incur what's called a break fee. Now, the break fee can be quite expensive. How much break fee you will be charged depends on the loan amount at the time you want to break the fixed rate contract, how long you have to go still until the fixed rate contract expires, and what rate you're paying now. How much is it? It's impossible to tell you right now how much the break fee is, but it can be in the thousands. All right, so keep in mind that if you think you're going to sell your property within a foreseeable future, within 1, 2, 3, 4, 5 years, make sure that your fixed rate doesn't go beyond that period, because you might incur a break fee. All right, so that's important that you understand that. So as you just saw, there are benefits of having a fixed rate. You know exactly what repayments are. It's easy to budget. But there are also limitations to a fixed rate. If rates go down, you won't benefit from the lower rates. If rates go up, obviously you will benefit. And there are restrictions with a fixed rate. So it is important that you understand what the benefits are, what the disadvantages are, and whether it is right for you. Now, you're probably asking the question, Daniel, do I really have to choose between a fixed rate and a variable rate? Well, you don't. Because you see, there actually are 3 types of rates. You've got the variable rates, you got the fixed rate, and you also have a combination of both, fixed and variable. And we'll call that a split loan rate. All right? It means you're going to have a bit of both. You're going to have the advantages of a variable rate, where if you need an offset account or if you need to be able to make unlimited repayments, you can use a variable portion of your loan. And if you also want the certainty of a fixed rate for a foreseeable number of years, you can have a portion fixed. Now, the question is going to be how much of fixed versus variable you can choose. And it can be 50-50, 30-70, 20-80, you decide. And also for how long you're going to fix. So you see, there's a way of hedging your bet both ways and go for what's called a split loan. But remember, whether you have a loan that is 100% fixed, or if you have a split loan where a portion of that loan is fixed, you still have the disadvantages if you want to break that fixed rate before it expires. All right, so understand what a fixed rate is. If you want to take advantage of very, very competitive fixed rates right now, make sure it's right for you. If you don't know whether it's right for you, if you want to see what your options are, as I said, I've included a link in the post where you can book a 15-20 minute breakout session with me and we can discuss your options. Now, I will help you decide whether fixed rate or variable rate is for you. As usual, there's no commitments, there's no obligations. Now, if at the end of the 15-20 minutes you think that you know what you want to do, it's your decision whether you want me to help you with that or whether you want to do it with someone else, or if you want to go directly to the bank. All right. Now remember, if you like the video, make sure you share that video with your friends and colleagues, and make sure if you've got any questions, you can always ask your questions in the post and I will respond to it. Make sure you take advantage of the free 15 to 20 minute phone call to discuss your specific situations so you can decide whether a fixed rate or variable rate or split loan is right for you. And remember, it can be whether you're buying a property and need a new loan, or whether you have an existing loan and need to refinance it. Thank you very much. Make sure you share it. Make sure you ask questions. Bye.